For some insights on the jobs data and what it could mean for the Fed's policy, I want to bring in Roger Ferguson, former Fed vice chair and a CNBC contributor. He is our Fed whisperer of sorts. Roger, your personal reaction to the numbers before we get into sort of how you would handicap the Fed's reaction to those numbers.
Yeah, look, extremely mixed. Obviously disappointing the top line growth, 50,000 versus the expected 70, which was already sort of soft. On the other hand, unemployment rate moving in a more positive direction, we'll say, for those who want to see a healthy economy. So I think, unfortunately, this sort of continues the trend of data on both sides, giving everyone a chance to argue. My personal view is against this kind of mixed report. If I were sitting at that table in January, I'd take a pause and wait and see and try to get a little bit more clarity.
And so if you're the Fed, you think that you're just waiting. There's no movement.
I think no movement this time. The market is expecting 50 over the course of the year. There's a lot of talk that January may be a pause. And then when I look at the minutes that came out for the last meeting, it was an incredibly close call. There was a lot of negotiation and maybe some arm twisting. So, he got the last cut with, I think, a fair amount of reluctance. And while there will be arguments on both sides, I see no particular harm in waiting at this stage. I think most people will see no harm in waiting at this stage, as long as they communicate that they're ready to move again if need be.
Well, let me throw another sort of maybe even economic grenade into the mix, which is we may hear from the Supreme Court later today on tariffs. And I'm curious how you think that re-scrambles the situation, depending on the outcome of that as it relates to this, frankly.
Yeah. So, look, the issue around tariffs has to do with a couple of things from the standpoint of the Fed. One is what sort of already occurred, which is, has the inflation that was expected to come from tariffs been fully felt or not? And, there's a big debate there, but I think everyone was, somewhat relieved. But that's all history. And so if it turns out that those tariffs were illegally placed, then the next question is, well, is there a refund? The numbers we're talking about are large by most magnitudes, but not enough, I think, to move the macro story. So I think the tariff story is less about the Fed at this stage and more about, other things in terms of...
But in terms of if there is, in fact, I mean, we were just discussing, if we hear at 10 o'clock that this thing is struck down, goes back to an appeals court and has to get re-argued effectively, that could be one version of it. But no matter what, I imagine we're going to hear from the White House an hour or two later saying, well, we're in the interim, we're going to be doing X, Y, Z to continue these tariffs. And so the question is how much that actually re-scrambles anything.
I'm not sure it re-scrambles anything. As I said, the tariffs are already in place. The macroeconomic effect, while it's still being debated, has felt maybe some more will come. But if they say effectively we're still on the same path, then I think we still have the same dilemma, which is, why haven't we seen more feed through? Is there more to come, et cetera? If they say, well, we're just going to wait and see, i.e. the administration says they're going to wait and see, then the Fed is still in the situation where whatever inflation was in the pipeline is still there. So I don't think it's going to have major impact on monetary policy conversation as much as other conversations about the president's authority. Right. And the most complex thing is, if it turns out these tariffs were illegally imposed, what's the remedy? But I think at the January table, I don't think this is going to, the tariff discussion is not going to play large.
And one final question, but we only got about 30 seconds. When do you think we'll actually learn, when we start to see unemployment numbers like this, how much of it is impacted by AI? Is there going to be a moment at which you think we'll actually know one way or the other?
I don't think we're going to know, Andrew. I actually think we're seeing some of it already. And the reason that is that AI, this time around, the technology is very, I'd say, democratic. Anyone who has a smartphone has access to it. And companies are imposing it at very uneven levels. So I've already started to think some of what we're seeing, which is relatively rapid growth for the headline GDP, stock market is still rallying, obviously. Some of it has already to do with the early stages of productivity improvements.